Hey folks, my name is Eric Wilkinson. You might recognize me as the Wolfman, but I'm here to teach you guys some different option strategies that you can implement into your portfolios, but please do that in your own way. Also remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, with that out of the way, let's get it on with some economic data. Yes, it's Thursday, July the 25th, and I do have a webinar going on today. We missed last week because I was looking to be on vacation, so we missed that one, but I am going to be working on one today. So check it out. It's going to be a really good one. It is on the iron butterfly, so check that one out. I'm going to talk about all the rules and stuff like that. Actually, we're going to build this out as if we have a directional assumption and then come up with this strategy, just like you and I would do on a daily basis. You know, usually, say for instance, with crude oil, we come up with the directional assumption in crude oil and then have to come up with the strategy that fits that assumption, right? Well, I go through those steps and that process in this course that we're doing right now. So check it out at protraderstrategies.com. And without further ado, let's get on with some economic data. Remember, yesterday we got a lot of the PMI numbers, which is Purchasing Managers Index. Those weren't too bad. So today we're going to be looking at a couple of other numbers, not so much across the pond, but here in the United States, we got core durable goods orders. Now remember, this is durable goods that and durable goods are something that lasts over 3 years, a manufactured product that lasts over 3 years. An appliance, a car, an airplane, if you're buying airplanes, if you're in that market. Then let's take a look at that. Core durable goods strips out some of the more volatile aspects of durable goods, and that is transportation. So when we strip out transportation, we get 1.2%, a full percentage point better than the expected 0.2%. So manufacturers not even are seeing that demand through the Purchasing Managers Index. They are actually producing durable goods through that stuff, and you can see that that is ramping up quite nicely. Durable goods, including the airplane. So a lot of people look like they were buying airplanes this month. 2.8%, or sorry, 2% expected to be 0.8%, so beating by 1.2%, so a nice beat on that, at least that, or cars. The last month's number, though, was revised down almost by a full percentage point from negative 1.3% to negative 2.3%, so I guess that is a full percentage point. So almost wiping out all of the gains seen in the headline number there. And then finally, we get unemployment claims, 206,000 versus 222,000 expected. And finally, natural gas storage is coming in at 36 billion cubic feet build, expected to be 40 billion cubic feet. More than expected there. All right, let's talk about the overall markets. Crude oil really struggling with a rally here. I thought that it was almost a green light to start moving higher after especially seeing the crude oil inventories. Remember, that was a big drawdown, which means lack of supply should cause prices to go up. But, you know, as oil, it is a lot of times counterintuitive to what the economic data is. They like to put the pressure on there. We can see that yesterday crude oil fell out of bed, even though we got that crude oil inventories number. Today, finding a little bit of support, and something to note, that purple line that we threw in there that was finding support and resistance is continuing to act as that support and resistance area. It's lying somewhere, you know, it might need to be adjusted a little bit. I kind of just threw it up there pretty sloppy, but it seems to be lining up quite nicely with somewhere around $55, $56 a barrel, right in there somewhere. There's probably a really nice marker for it, but I'm just looking at it as that line right now. Maybe I could adjust it just slightly. Can I move that thing down just a little bit? No. Anyway, we're finding support in and around this area here. Gold finally coming off a little bit by about $5, basically just making up for any of the rally seen yesterday. We've talked about this. If the Fed starts lowering interest rates, that's going to create a weaker dollar, should drive gold higher. But, you know, we're getting this economic data, and I've talked about it time and time again. I don't know. It doesn't seem to me like the Fed really needs to lower interest rates at this point if we are really moving interest rates in accordance to the U.S. economy, it isn't really showing up as something that needs to be done. It's more of a preemptive strike to try and create more of a bubble and maybe spike up some inflation. Anyway, bonds coming off a little bit. Obviously, they're looking at the economic data saying, hey, you know, this stuff is pretty good. They might not be lowering interest rates at this meeting like they've been talking about. So bonds starting to come off just a little bit. At one point in time, they were down 1 full point on the day, but starting to see some of that come back a little bit as equities are starting to see a little bit of weakness going on. You can see VIX moving higher by a point, back in the teens, and that is a product of basically the equities starting to slide here. We see the Dow Jones Industrial Average off by about 140 points here, near the lows of the day. NASDAQ, similar situation, off 84 points, 83 points right now, but near the low of the day. One thing to note, yesterday we did get that move, push higher to get a all-time high in the NASDAQ during the day session. Remember, we were talking about we hadn't seen that during the day session. Now we did get that, so it is a real high and low. So that is something to keep an eye on. 8,051, we could maybe even call it 8,052, but something to note here with the E-mini S&Ps, we had a 3,000 print, but that was overnight. Again, we got that print overnight again here, the 3,027.75. If you just see, I can take this price off relatively quickly, and we can see that yesterday had the high of the day. So finally, we got the print, the high of the day in the session yesterday. Today, we are seeing that get printed in an overnight session, a high that we have to worry about. And we can see that show up here on the mini S&Ps. They've made a valiant effort to hold it up there, but coming into the day session, you can see overnight inventory very long. Coming into the day, they flushed themselves out. Not much of an effort during the day session to make that move higher. Again, we're starting to see some weakness show up in the markets, and we're starting to come off. A lot of that could be not bad economic data, because we got good economic data, but the fact that the market is banking on a Fed rate cut, and the economic data here in the United States is making people really start to worry about that, and that's causing the markets to start to move down. All right, let's talk about a couple of trades that I've done here with Lululemon. I decided to get out of this trade a little bit earlier than normal. If you guys remember, I had on the September, and I was long the 195 calls in there. We came up, made a new high today in Lululemon during the day session. I originally paid about $8.60 for those, somewhere around there, and I got out for $10.15. I kind of chased it. I was working an $11 bid when we rallied up there to that 93.71, and I was thinking, man, we got another 50 cents to go, and I'm at a 50% increase in my position, so that would have been the time to get out. But then the way the market's starting to set up, the equity started rolling over. Lulu's at the top. I decided to cover it, so I got out for $10.15 on that. And then we go over and talk about a couple of the earnings trades that I have done. LUV, Southwest Airlines, you know, they basically fly the 737. The MAX is one of the big, they probably have several MAX, Boeing 737 planes grounded right now. I thought that was probably priced in already for the overall market, and I do believe it was, but they did come out and didn't have the best the best earnings call. So in LUV, I went into the July weeklies that expire tomorrow, sold the 52 puts in there originally for in LUV for 35 cents, and was able to buy those back for 30 cents. So didn't make a whole lot of money there, maybe enough to cover my commissions on that. But you can see had I just waited, it rallied up. But that doesn't fit along with my rules. Usually I like to cover those immediately unless it is a loser. And this one was kind of a loser in the beginning when the market first opened up and came back down. So I decided to put a bid in there just to make enough money to cover commissions in case we got a little bit of a bounce. We got that bounce. I got filled, and it would have been a great trade at this point in the day. But hindsight always being 20/20, right? We don't wait for that. All right, Las Vegas Sands is another one. I played everything to the upside yesterday. Was pretty bullish, feeling like most of these markets had already seen some stuff. And with Las Vegas Sands, we had already seen a couple of earnings out of the casino space. They didn't do too bad, so I expected this to do well also. They missed on earnings, but the market started to rebound, similar to what we saw in Southwest Airlines. So Las Vegas Sands went into those same July weekly, sold the 62 puts though, and originally sold those 62 puts for 39 cents and bought those back for 18 cents. Again, both of these trades, Las Vegas Sands, Lulu, or not Lulu, but and Southwest Airlines, both of those directionally wrong, you guys, but still made money because of the way we set these strategies up, increasing our probability of success. And that's why I have the rules that I have, so that you can follow them. Even if you're directionally wrong, the probabilities are in your favor and you can still be successful. So those two lost money and still, was directionally absolutely wrong, and should have maybe lost money on a directional move against me, but I was able to pull it out for a scratch on the one that I made a nickel on, but the commissions and everything, or a winner. So that is great news, right? And then finally, we got Facebook here. Facebook, I played up to the upside. Again, July weeklies, and I sold the 190 puts in there. Now, Facebook right off the bat was looking pretty good, despite the fact that they've gotten one of the biggest fines ever, $6 billion on, a lot of these government agencies are coming after them. So, but that's a drop in the bucket to Facebook. I don't think that was the driving force for this, but there could be a lot of sentiment out there that's really worried about Facebook, especially above 200, which we did break above that yesterday and today. Then with Facebook, like I said, I went into the July, sold the 190 puts in there for originally $1.90 and bought those back for a nickel. So out of that trade, thankfully, like I said, get out of those early because this could have started looking like a loser with this market coming back as much as it has. It very well may be a loser at this point. But I'm not going to stick around and see what happens there. Finally, there is a ton of earnings coming out today after the close. We've got Amazon, McDonald's, MGM, Starbucks, Expedia, Google, and Intel. I probably am not going to have enough margin to trade all of those like I want to, but I'm going to put as many of those on as I can because I have a pretty decent picture as to what's going to happen. Probably stay away from MGM and maybe Starbucks, but that's going to be a game time decision later on in the day. All right, that's all I got for you guys. Check out today's webinar. Like I said, it's on the Iron Butterfly. It's going to be a great one. We come up with the market direction and then find the strategy for it. So this is a great course. I haven't done it before, and a lot of you guys have been giving us great feedback and appreciate that. So go to Pro Trader Strategies and sign up for that. Like us on Facebook too, so you can get quick access to these videos. Can't take that? Take it easy.